U.S. futures head into Thanksgiving on a low note. China's industrial activity slows to the slowest level in 32 months, and manufacturing activity in the Eurozone continues to contract, with Germany and France the latest victims. Worries about global growth drag on stocks. I'm Alix Steele, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Alix Steele with The Street, and together we bring you the morning call. You know, Scott, stocks are not looking so good headed into Thanksgiving here. When do we reach oversold levels?
I think we tried to reach them yesterday. As you saw, the market tried to bounce on the news of the IMF trying to help out, but it was short-lived. So obviously we weren't oversold enough, as we are still in this market correction, but the oscillator is down like minus 75 or minus 80, so it makes it very hard to short here. Hopefully, you know, you covered already, but trying to be long and trying to be a little early in a defensive tape or in a broken tape, it's difficult. But today, futures down 10, 12 handles. We go into Thanksgiving tomorrow. You know, there could be some opportunity at this lower level.
Right. So let's look at the level on the spiders to see where that opportunity may be. And if you is that where you go long then?
I'll try. I actually took a little spiders home yesterday, thinking they might try and push the market up a little bit so people feel comfortable and happy for the holiday. But maybe just the headlines are that dangerous. We saw some more headlines about German.
Right. So so there were two headlines that really hit the markets today. The first was that China's manufacturing activity slowed to the slowest pace since March 2009. But I do have to say that October's reading, though, it was at like 53, and now it's at 47, 48. So there's a lot of volatility here. So you have to wonder if it'll be revised upward, and maybe sentiment's just too negative.
Well, there's just so many headlines to make it that negative. Even our GDP was revised lower. And again, what did you say about which in Germany we were talking before?
Yeah, that Germany sold only 65% of all its debt that it wanted to sell today, so there was just not enough interest. Yields were down, but the interest just wasn't there, and that also sort of hammered markets a little earlier this morning as well.
So the stronger nations are starting to weaken somewhat, and that's exactly what people didn't want to happen. Yeah. So if we go to the chart, something I understand a little bit more than all these headlines, let's take a look. This is a chart of the spiders. This was that great move from October 4th all the way up to the high put in at 1292 around 130. Here is that wedge that resolved to the downside. For technicians and for chart readers and for those of you that are learning, hopefully you got out of a lot of your stocks when we broke here around 124.50. And if you did so, you have the opportunity to try and buy into this support. We have a small 2-day pivot that was being put in around 118.65 in the spiders, but it just got taken out this morning. So if you do a little closer look here, you will see we're opening up below 118.65. You do have one more level here, a level that coordinates back to this downtrend that was resolved to the upside. So sometimes on a retest, you might see some buyers come in, and that stands right now around 117.25 to 117.60. I will see if I see any kind of strength there to buy some spiders, and then maybe buy some of the stocks that went green yesterday that are opening lower with this tape right now.
Let's talk about that. What went green yesterday that's opening lower? So I want to hit on gold. It's up over about 20% for the year. It had almost a 3% sell-off Monday, then rallied about 1.5% yesterday. It's down a little bit today, down about $10. We're kind of shaking out options expiration, which I'm hearing it was relatively constructive for gold, meaning that long positions held somewhat. Is this a place that you want to get interested?
I think there's still people supporting the gold market. Like you said, it's up 20%. So at this point, there are still hedge funds and mutual funds that need to protect those gains. And for those of you in your tier 1 that have stayed the course, you still have profits there also. It's been a good scenario for you. As a trade, it's been a little complicated lately. But for today, it could be something to look out for cash flow. It was up decent yesterday. There was strength. So down $10. Maybe if you take a look at the GLDs for a trade, it could go positive. So for me, I'm going to maybe trade it long versus that prior low here, which is about 162.07. As long as it stays above this, I think that the pressure could remain off, and you do have some more room to like 167, 168. But and on more micro version, yesterday's low of 164.61 should hold if momentum's going to stay there for the micro trader.
All right, so let's get to some stocks then that you might also want to look at. I'm going to highlight Newmont today for a few reasons. One, because on Monday when we had the sell-off, it was down like 0.25%, and then yesterday when we had the rally, it was up about 0.7%. So seems like it has some kind of protection here around its dividend, which is over 2% right now. It's going to be making headlines, however, because a mining tax just passed the Australian lower house, and it's supposed to pass the Senate in 2012. So 30% tax, high, but not as high as the 40% a lot of miners were fearing. So I wonder if there's like a juicy trading opportunity around this headline.
So if they were expecting 40% and it came in 30%, that should be somewhat positive.
But 30% is still a lot. So.
Right. So there you go. So if you look at the chart of Newmont, let's take a look, because there's been some pent-up energy there. And when the market tries to rally, I always put my eye on Newmont, and it always seems to be a little perky. So if you look here at Newmont, you'll see, stock is pulled in. This was that upper flag right here that resolved to the downside, just like the market. So if you were a momentum trader, you got rid of one of your tiers. If you're a macro trader, you're still there. Short-term support was 64. I would make sure that if you're in this for the short term, it holds above this. For longer-term guys that might have missed this move or sold into the strength, this 61 around the 200-day is going to be very important. I'm sure institutions will try and defend that.
And what about Randgold here? We've been talking about it recently. Had a nice pop yesterday.
This stock lost momentum when it went back below that 115, and we talked about the importance of knowing your time horizon and the type of trade you're looking for. It had momentum. When momentum leaves, if you're not committed to the long term, you get out of the way. And if you look here at GOLD, you will see that this was that line in the sand. It hovered above this 115 for a while, then it broke below, just like everything else in the market. But it held longer-term support. This is where it broke out from, back in late October. Held it. So some are trying to buy versus 105. I think as long as it stays above 105, it's constructive. But if it starts getting below this 105, people are going to start, losing some interest there.
All right, I'm going to throw another name at you that we didn't talk before. It's Kinross. The reason why I'm throwing it is because the stock was up over 5% yesterday on the news. It might be signing an operating contract in Ecuador. Also, it seems like traders are really stepping in to buy upside calls. And I read an article on the street that said, based on Tuesday's call buying, investors are looking for a rebound by early in the year, next year. Would you be trading this maybe?
Give me the symbol.
KGC.
KGC. Okay, we went over this once back in a few sessions ago.
It's been one of the worst gold stocks of the year.
Oh, maybe that's why I'm not familiar with it. Anyway, look, someone anticipated something.
Yeah.
Right. This is a nice wide range bar after making new lows in the year. I'm not sure what it's doing right now, but there's going to be some significant resistance around 14. So if you bought it yesterday and it's up on this type of news,
maybe you want to sell for profits.
Maybe you want to sell some, because there's going to be a lot of resistance around 14 and maybe 14.55. So from where it just was from 12 to 14 and change, that's probably the move.
All right, fair enough. So you kind of missed that move already. Let's round this segment out with Royal Gold, RGLD. It's a royalty company. Doesn't have necessarily the mining risks. It gives money upfront to a gold miner and then has the right to buy a percentage of gold production for a very low price, like $400 for the life of the mine.
So let's see if the interest is staying here. So if we take a quick look at the chart, you will see that fundamentally what Alix said makes sense, and technically it's lining up. It did hold the 50-day yesterday. So just like everything else, as you see, patterns repeat themselves. This upper flag where people were looking for potentially a new high broke to the downside. So then you have more support right here around 72. Nice 2-day move. So there's interest there. So I would say trade, if you're short-term, trade long versus this 72 today. Perhaps if it's down with the futures, maybe trade it long for cash flow versus this this 75.
Yeah, and the model that I just spelled out is one of its models. It also winds up giving a huge chunk of cash up front, which can kind of be a little painful on its profits, and then it gets the gold over the life of the mine. So it has a different kind of mix there, which is what makes it also very interesting.
And it's reflecting in the stock.
There you go. All right, we'll be right back with retail, another stock and sector that you might want to be looking at right after this.
Hi, I'm Sean Hendelman, CEO of T3Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Let's take one last look at retail headed into Black Friday, headed into Cyber Monday. Scott, I was talking to a strategist from Global Hunter Securities that says one of the big trends he's noticing is home improvement, remodeling, kitchen remodeling, organic food, that kind of thing, and also athletic wear, sneakers, yoga pants, and that kind of stuff. So I wanted to see if the charts were reflecting that kind of strength. Wanting to kick it off with Macys that kind of benefits from both of these trends.
And that makes sense, because considering no one could really afford to buy a new house and no one could sell their house, so might as well feel good and remodel it. And then also, like you said, with Under Armour or with some of the gear situations, you want to look good and feel good. So everyone is doing what they can to feel better in this world type of environment. Let's hope these stocks could feel good at some particular point.
So does Macys have any juice headed into Black Friday?
Macys has been a stock that's definitely rewarded investors. Right now, it's I think at a bit of an inflection point. It was at new highs. It's been controlled pullback. You had a nice green day 2 days ago. And it's still above the moving averages. I think as long as Macys stays above this 30 of this upper support, perhaps if the numbers are good and the market gets some traction, you could trade it for momentum above 31. But at this point, we're finding it hard to find any momentum. So just don't chase these. And if you're in it, and you don't want to be committed, make sure you have a tight stop around this 30 level.
So you wouldn't be taking this into Black Friday or anything like that?
No.
Okay. So then let's go to the other trend. Let's keep with the athletic wear. Let's go to Lululemon. We've been talking about it a lot. If you don't buy the $250 pair of jeans, maybe you're going to splurge on yoga pants.
Exactly. And right now the stock, though, has been slowly slipping away because I guess with the economy so bad, people, might have to buy something that's $100, not $250, right?
Or it's also been a good momentum trade throughout the first part of the year, right? So maybe it's just a trading vehicle right now?
It has been, and the momentum has been leaving. So when momentum leaves, like we've seen with other momentum names, you have to be careful. So if you look here at LULU, it's weakening a bit, and the chart's telling you that. So take a look here. This was, that last wedge that wound up resolving to the downside. It's now hovering on lower support. It's now below all these moving averages. Usually LULU is above all their moving averages, so that's going to show resistance. I guess from a short-term standpoint, it's holding this 46 area, and then below that you have that low from October, which is all the way down to 42. So if you missed your exit from selling it when it broke below this wedge, maybe buy it, versus 46. But if it breaks 46, it could hit 42 pretty quickly.
Is Under Armour holding up better still?
Let's take a look. That one also got a little pressured like the market. So if you look here, it was trading near the highs. You had this upper level that people were trading for, a new high scenario. And now it's just dribbling lower. So it's below the 50-day, so it lost the 50-day. It's below the 10 and the 20. And, it's still above this prior breakout, so it's acting okay. But the 200-day, just like most stocks, could become a magnet, and that's 69.39.
So the strategist I was speaking with, Richard Hastings, was also saying that the high-end retailer is actually going to get hurt more from all the trickle-down effects in terms of Europe because they have more money, more to lose kind of thing, and they have more exposure to Europe. So with a Nordstroms or a Tiffany's, are they showing any kind of weakness to reflect that?
Both of those started to actually give in a little bit, and they've been a bright spot. So if you look here at Tiffany, you'll see the same thing on the chart. Here was that upper wedge that people were trying to figure out if it could break to the upside with the market. Broke below, just lost a 50-day. So now if you're investing in Tiffany for the short term, you better make sure that it holds the 200-day. If it doesn't hold the 200-day, it could continue to get pressured. So I would watch it versus this 68, 66, but it is losing momentum. And if they don't report good earnings and if people stop spending the big money, which it seems like they might,
or gold keeps going higher,
then these things could lose their luster.
All right, fair enough. Let's go to other retailers. We've got to talk about Apple and Amazon, one of the two retailers that actually went green yesterday. Of course, the big rumor is Apple could unveil the biggest store that it has at Grand Central on Friday. Lots of speculation around that. Are these two sexy trades right now?
For the short term, yes. For the longer term, they've both been very pressured. They've been battered and bruised ever since Apple broke that channel that we were talking about at 393. It's been a short, but then it just held the 200 days. So if you know your time frame, if you sold it when it broke that technical level, which I'll show you here, you got a bit rewarded, as it held the 200 days. So for a short-term trader, this was strong yesterday. It's down like $2.50 this morning. I'm going to look to see if the futures go lower, it holds in there. I'll buy some, and then I'll perhaps add if it goes above yesterday's high of 378 to get a move back to this 382 area, but I'm not expecting much. This stock is pretty broken here, and if you look at it from a more macro stance, it is holding this support line. But if at some particular point over the next week or so it breaks 366 or 363, it could be in trouble all the way down to 320. So
and
watch
Amazon?
it close.
And Amazon, same kind of strategy maybe?
Yeah, Amazon lost its 200-day.
Right.
Apple at least held theirs. Short term yesterday, it got a nice squeeze. Some guys made some money. It's going to be opening down also. There's a small micro pattern that I'm a bit excited about today. I love when stocks try and get into their gaps. So right here, again, this one lost its momentum on earnings, never filled a gap, so it's being controlled by weakness. But yesterday, you had a reversal into support, and today, negative to positive. You trade for that. I like that strategy. And then if it starts to get above yesterday's high of 194, it could push into this gap, and that could be a nice day trade for those looking to trade for cash flow. Kind of like what you saw right here when it traded over this. Look at this nice wide range squeeze into that gap. So I'm looking for the same thing here.
All right, we got 4 stocks in 1 minute that we want to show you if we can make some good trades today. Las Vegas Sands, is there momentum here you can trade?
I think this is a candidate for negative to positive, but don't chase it.
All right, what about Medivation, biotech company, near 52-week highs?
This is actually a pattern I have to show you because it's holding in there better than a lot. It's got a nice upper flag. It's defying all logic. There's a lot of shorts
Defying
caught.
logic, that doesn't sound so good.
Well, look at this move that it had, boom, boom, and now at this particular point, if it starts to break above this 44, 45, it can continue, but be very careful. I would just trade this really intraday.
And how about SodaStream, kind of a retailer? We're going to see a holiday pickup or a good trading vehicle?
It's been getting battered and bruised, and it's on the lows. Just like a GMCR and a Netflix when those momentum leaders get crushed. Look at SOTA here. It's at a crucial spot that you definitely need to be watching. You had a big move lower, and then it's never bounced, and now it's hovering right at this area. If it starts to break below this triple bottom, which usually don't hold, you could see another move lower there.
Would you be shorting the stock then?
Yeah, people will be looking to short the stock. For me, it's had a big move lower, so it's a little tricky, but there will be some that lean on it.
All right, let's round it out with Deere here. Reported really good earnings before the bell. Revenue is up. Earnings were up. Both of them were beats. Next year guidance sales going to be up 15% for the first quarter. It's going to be up between 16 and 18%. Stock was up like 4% in pre-market already. Good trade today?
We'll see. What will be good to notice is that all those numbers sounded really good, and the stock's up. And if this stock can't hold up on good news after getting a pull-in with the market the past week or so, then you know just how weak we are. So I don't think it's going to be an easy buy in the open, but psychologically, you don't want to see all of a sudden Deere open up, go negative, go down after good numbers. That just shows you how weak that group could be as well as the market.
Maybe Deere not a good trade today, but a good proxy.
Exactly.
All right, good stuff. Okay, so happy Thanksgiving, everybody. Have a wonderful holiday. I'm Alix Steele from the street.
And I'm Scott Redler from T3. Just want to make sure that have fun with the holiday. Enjoy your family. I know there are nasty headlines everywhere, and everyone is a little depressed. I think I'm a little down, but just be appreciative, because the world's a crazy place. You can't control the headlines. You can only control your actions, and don't sweat the small things. And did I tell you what my grandma said yesterday?
No.
No? My grandma said if a check could solve your problems, you really don't have that many problems. So just put it in perspective and enjoy the holiday.